Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that back test on the Bitcoin chart. Guys, here's what I was saying in the last episode of Alpha Commission related to an accumulation wedge. This is a very nice accumulation, and until proven otherwise, as long as we're breaking out and just having a back test, I still would expect it to be impulsing parabolically. Now, sometimes these shapes that we measure on horizontal. All right, guys, so basically you can see that I'm looking at this big accumulative structure here on Bitcoin. And by the way, guys, like we're doing these recordings in the group now. So if you want to take a look at the link in the description below, feel free to sign up. I'm doing them in the public chat, so even if you just want to just verify your account and just, you know, prove that you're a real person, you can come in and join some of these streams in the future. Now, this is only my second time doing that, so hopefully we can make it a tradition, and then after the recording, maybe a little bit of Q&A. But guys, times are a little bit slow right now. As you can see, I was predicting a bit of a pullback on the Bitcoin chart. Now, as typical, we see everybody losing their minds today, right? Like, oh no, the floor is dropping out and everything is super bearish, right? But guys, we were calling for that pullback off of this bearish divergence, weeks ago, okay? So we've been planning just to kind of base up here, get a little bearish divergence, and maybe do a back test. And only if that back test fails, then we're going to get bearish, right? That back test had a depth, basically to 111. You can see this realistic harmonic target here. And if we started to push down below that bearish harmonic underneath 110, then of course we're going to have to check back and, we're going to open up that range to 100K. But guys, I just have to remind you, as long as we are above 111, this is nothing but a bullish back test at this moment. And I really don't understand people putting out warnings after the pullback has already happened. Okay, like guys, people are just losing their mind on Twitter right now. And I don't get it. Like, we were up here calling for this potential bearish crab to pull us back to this realistic harmonic target. And then, of course, in the latest update in the group, I did suggest that we actually ended up printing a bullish crab that could just kind of counteract that bearish crab right at that bullish order block, right at that level that we were looking at as a potential retest off of this diagonal where resistance is now potentially turning into support. So unless we break down basically critically from that 111 low there, I just don't understand why people are freaking out. Now let's go ahead and take a look at the 4 hour. And on the 4 hour, you can see that I've been talking about this falling wedge. Let me go ahead and just make this a little bit more crystal clear. I'll just go ahead and put a little bottom zone on here and darken that up just a bit so you can compare it with the top. All right, let's compare the top right here. And this is that falling wedge. Now, this is a bullish pattern. And what I was suggesting is that, guys, since we did get that drop is what I was looking for. We now have this, 1, 2, 3, 4 shakeout, fake out potentially before the breakout move. Okay, and so I'm looking at this as a potential higher low off of this low that we just put in, off of a critical back test, both on these highs as well as on the diagonal, right at that bullish order block. So guys, I have to have a bias to the upside. I have to have a bullish bias in a bullish pattern that has a 70% chance of breaking to the upside. Now, 70% chance is nothing to sneeze at. If you have a 3-to-1 risk to reward, and you also have a greater than 50% odds of winning in your trade based on any particular setup, then you are likely to win over time on the majority of your trades. And so if you have a 70% chance likelihood of succeeding in a trade, then that just tips you over the edge. And this is how traders make their money. Now, guys, obviously, we really haven't proven this area yet. If I do just get rid of my little LARP line here and zoom in, as you can see, we only hit the first realistic harmonic target, boom, right off of that bullish crab formation. But we really have to hit and flip this general harmonic target. Why do we have to do that? Well, we have a little bit of a high right here at 116K, and we also have, a couple drop wicks back here. And so until we really flip that neckline, I can't say that this is confirmed, right? Definitely, this was our front-running signal, right? We got that front-run signal off of this little baby microscopic falling wedge here that I did suggest had a measured move up to 115. Guys, we caught that in the group. Again, if you want to check out the link in the description below, please, we're getting closer and closer, I believe, to an altcoin season, and it may be time to start looking at the charts with a healthy group that can support you. If you don't have one yet, consider the history that I have here on Alpha Commission, and maybe just try a sign up. Okay. Guys, we have a lot of support in the group, including the request a coin function. I was going over all of these coins on the right-hand side panel on Friday. Every Friday, we do a request a coin session, and basically they're all up. Okay, I think there's only like 2 out of this whole list that's actually down from our Friday session. As we looked to the upside off of these formations, and as we started to find the reclamations of our bullish patterns. Now, are we out of the woods yet? No. But again, like as soon as we get a little bit of a bounce here, this is going to look accumulative. Any type of a pullback, any type of a higher low into this structure that effectively validates that neckline, and any push above that $16,000 to $17,000 area is going to look like a breakout to me. Yeah, we can get slapped back down anywhere from this 118 to 120 area, maybe do a deeper pullback or some type of side chop, right? We do have this diagonal back here, right? Like it could get dicey again just as we pull back into that formation. But as long as we hold this diagonal here that was set by our parabolic top and continue to prove that as support after having previously used it as resistance, then I'm still going to be looking to the upside, perhaps at that 126 target, maybe even at that 140 target, where we do have fibs and pattern targets that suggest that those are some realistic areas to be looking at should this market continue bullishly. Should we lose 111, I'll be looking down maybe at that 110 first, and then, of course, in that 105 to 100K area. And it's only when we lose 100K that we do lose our golden parabola. So as long as we are above that golden parabola, any type of pullback is still looking bullish to me. It's just a bullish pullback into our golden parabola as we go parabolic to the upside. And I'm going to be looking for opportunities. I'm not going to be looking to freak out. Simply, we are aware of the potential risk to the downside, but we are not freaking out about it. We are looking for opportunities in this market, and based upon the macro liquidity, yes, of course, we can have little hiccups along the way. Even a pullback to 100 or 105K, wouldn't be super traumatic or anything, considering where this market potentially wants to go, should it have a blow-off top into the end of the cycle, which does seem to be elongating, and it maybe could have an extension to the middle of 2026. Now, personally, my gut instinct tells me that, you probably want to make the bulk of your money in fall to the end of the year. Just in case, right? Just in case, like the market front runs. But the way that liquidity is moving and the way that it looks like the Trump administration is probably going to want to put somebody who's going to be a money printer in place of Jerome Powell, we can just expect that most likely global liquidity is going to continue to rise, and that should benefit assets. It's not going to benefit the dollar necessarily. We could see inflation make a comeback, but it could benefit assets that could appreciate against the dollar, and in particular, that might benefit gold It might benefit Bitcoin. It might benefit some of these hard assets that are especially used as a hedge against the dollar. If I do go ahead and just take a look at some of these charts that we were looking at, you can see, even on these little baby formations here, okay, like if we just zoom out, this is just like a little baby formation in the grand scheme of what we're looking at on the macro, okay? And guys, like I go over the macro every week on Sunday, and then also, of course, we have the request throughout the week, and we have active traders in the Trading Hub. So again, feel free to join the group, but you can see just how precise of an entry we can get. And if you just zoom out and look at the opportunities that are in front of you, then of course, any little hiccup down here kind of feels a little bit silly in the grand scheme of things. And you can see that just even in our Friday conversation, this is where our low was. We're now putting potentially a higher low, and a flip of 440 here on APT is going to validate that, and maybe we get some type of a bullish kickoff on some of these coins. Other coins, like Metis, are doing very similar things. We can see these ones like Pump. We were talking about these lows in the same exact stream last week, and this one got a 40% pump off of our lows, right? And so guys, I just want to emphasize to you, every time that we talk about altcoins, just understand there's millions and millions of coins now. If you get a 5 to 15% pump off of your entry, consider to move your stop loss to entry, just to kind of make sure you're not taking anything on the chin should the market pull back. And of course, I like to aggressively move my stop losses up once we push past that 20 to 35% point, because if you lock in 30% profit 9 times in a row, you're actually going to 10x your portfolio. That is the power of compounding your gains in these markets. And you do not have to get a 10x in the chart. You can simply have 9 30% moves in a row that you compound on top of each other, and you will 10x your portfolio. That's just math, okay? That's not financial advice. That's just math. So guys, please remember to do your risk management. If you'd like this or other advice, please check out the link in the description of the video. I really think some interesting things are going to start happening in this market. That's your alpha for the day. Stay safe and happy trading.